Hey, everybody. Welcome to Tech Guys Who Invest. We are super excited to have our guest, Gino Barbaro from Jake and Gino on the show today.
Adam, Kevin, thanks for having me on. How's it going, guys?
Awesome, man. We're so excited to have you here.
So let's get this show on the road. Let's try to provide some value to the listeners, and I am an open book, guys.
Awesome.
Fantastic.
Awesome.
And we were just having a conversation before the recording started about certain personality types that those who want to achieve success are definitely going to. So we'd love to hear about your journey out of the rat race, maybe some skill sets that you picked up along the way, what you learned about yourself, something along those lines.
Sure. I mean, I'm going to give you a couple-minute answer on this because I've got a son who's a senior in high school, and he is doing dual enrollment down here in Florida. So he's taking 3 college courses at St. John's Community College: personal finance, economics, and intro to business. So in his personal finance, they're going over 401ks. And the teachers are telling him about 401ks. They're great, max them out. And he's like, Dad, and it's all counterintuitive. I said, Mike, just learn, get an A in the test, but you know that's not what you're supposed to do, right? Because you don't want to retire. And he said to me the other day, which I thought was fantastic. He says, why would I want to wait till I'm 65 to be rich to retire? I'm like, bingo. I said, you're not going to retire ever because you're going to love what you're going to do. You're going to buy assets. You're not going to save for an event. You're going to buy an asset, let that asset pay for the event. Because let's say I put $100,000 away for his college savings, which most people do in a 529, earns 3%, blah, blah. At the end of his college, that $100,000 is depleted. It's gone. But if I bought a $400,000 house, that's providing cash flow for me. That's appreciating. That's paying principal pay down that I'm getting cost segregation on. I can pay for his college from that cash flow. And when he's done going to college, I've got 6 kids, 5 girls and a boy. So the other ones are going to get paid, are going to go to college. I can pay him for that same asset. So that is the mind shift from the middle class. Like Rich Dad says, wealthy people buy assets. Middle income people, like I was, buy assets. They think they're assets, but they're real liabilities. And poor people just buy liabilities and have tons of expenses. So my financial journey, believe it or not, started when I was 24 years old. I bought a restaurant with my family. This was back in 1994. It was awesome back then. Complete different economy. Mom and pop restaurants, those little stores, they could survive because it was a great little living. Taxes, I was up in New York. Tax base wasn't killing you. Healthcare costs weren't as bad as they are now. Education, when I went to college, it wasn't as expensive. So the cost of living was cheaper 25, 30 years ago. So you could have a little business. You didn't have to lever your time or your money like you do now. Fast forward to the Great Recession of 2008, I said to myself, what's going on here? I'm working harder. I'm making less like everybody else. The internet comes around. All of a sudden, we have to start delivering food. Grubhub comes. Uber Eats comes. Everything starts eating to your margins. And you're like, what's going on here? You have to think to yourself, let me create a brand. So I started doing that with the restaurant. But then Multifamily came along. I met Jake, went to life coaching school, really became clear on what I wanted. And the tools you asked me about to become financially free, I think the first thing you have to understand is, to become clear on what you want. I think become clear on not saying I want to retire, but your next step in life, finding what your sole purpose is. The whole goal when you're young is to just try to educate yourself as much as possible. Try to learn some real great skill sets. I think everyone should go into sales. Everyone who's an entrepreneur needs to have that skill set because it's all about marketing and sales. Any kind of business, any kind of company. Let's say you have a great product. Off the bat, if you don't have a great product, don't go into business. But if you have a great product, the next step is it's all about marketing and sales. And you don't have to be a sleazy salesman. You have to be a sleazy marketer. There's so many different types of sales programs and negotiation programs out there that you have to learn to become successful in the space. And the next step is, I think, just having a mindset of being a wealthy person, being a producer, not a consumer. You need to produce. You need to be careful of what your consumption is. And when you become wealthy and you become financially free, you don't really need to buy anything anymore because you're satisfied because now you're doing what you really love to do. And, if you want to buy a Lamborghini, go ahead. But I'll guarantee you when you become super wealthy, that's not what you're working for anymore. Profit's the fuel. It's not the destination. So I think people have to understand that. Figure out what you love to do, become financially free, and then start stacking up. And skill sets. I think everyone should go out and try to do some life coaching, try to get that skill set where you can help others. Because once you start helping others and you start contributing to others, that's where it becomes really fun. I love getting emails every day from my students, whether they quit their job or they bought a deal or they've got a cash flowing property or they have questions and I can help them out. there's nothing better than that in life, because obviously the more people you can help, the more your money you're going to make. So money to me is not the cause anymore. It's the result. And that was a real pain in the neck. I thought I had to work for money, work. But the more value you give and the more people you help as entrepreneurs, you're going to make more money. That's why apartments and multifamily is the way to go. When you have 5 units, you help 5 tenants. When you have 500 units, you help 500 tenants. So it really sounds simple, and it really is simple, but it's not easy. That's the problem, right, guys?
Oh man, you said so much.
And I speak too fast. I'm Italian and I'm from New York. I got to slow down a little bit. Tell me to slow down, but I get excited when I talk about it.
Yeah, we're in Florida now. You gotta relax.
It is dense. Good stuff. There's a few things I want to unpack from that. First of all, like, that's a total tweetable quote. Profit is the fuel, not the destination. Love that. I'm going to hang on to that one.
Me too. Yup, I love that one.
That. So you mentioned Rich Dad, and I heard a lot of great kind of principles and underlying values in there that sound like what I've learned through Rich Dad and taking on this wealth mindset. I'm curious. Also, you escaped the rat race. You were doing something different before you got into multifamily that was more like a job. Did you think this way? Did you have this mindset when you were in that? Or how did you develop it? When did that come along?
That question I could take all 45 minutes to answer that question. But real quick, I had a lot of pain like everyone else. Not pain in the sense that, but I had pain in the fact that I knew I could do better than what I was doing at the restaurant. I didn't want another job. So I knew fixing and flipping wasn't in my future. I wanted multifamily because I could think at the time, it's passive. Multifamily is a business. It's not passive. It can be passive if you have the right team members and you can start scaling. But it wasn't passive in the beginning. But I still said, if I can do multifamily part-time with a partner, with my brother who was at the restaurant, and do the restaurant, I can be the 10% entrepreneur where I can start weeding myself out. And that's what I ended up doing. It took me and Jake 18 months to find our first deal. And I only had one restaurant for 25 years. And in 6 years of real estate, we control over 1,600 units. The first 1,000 we've bought ourselves, and we've syndicated the next 600. So the mindset shifted completely because I started treating multifamily like a business. I started learning how to scale a business. I started learning how to run a business, how to implement systems, all these things you learn by trial and error, but you also go out there, you get coached, you get taught by people who are doing it. You either pay to play or you seek to serve. I had to pay to play because I didn't have the time to go out and help others. So if you're young out there and you're 23 or 24 years old, quit your job, find someone who you want to learn from and dedicate their time 24 hours, because you're never going to get that time back. Use it wisely. So for me, I got into multifamily by default because I couldn't do single family fix and flips because I didn't want another job. I wanted something to shelter my income. I wanted something where I could grow some type of income base. And I started out small in the beginning. My mindset was, let's do 25, 30, 40 units. I get a couple $1,000s a month in passive income. That will help me with my college bills for my children when they get married. So I started small, but then I saw to myself, once you start buying and you buy your first deal, then you become a deal junkie, and then you buy your second deal. And it's like, wow, this is possible. You can start scaling up and you can start hiring resident managers and you can get property managers and you can get maintenance techs, because multifamily allows you to do that. The scalability and the economies of scale can allow you to create a real business. That's what you want. You don't want to be a landlord. You need to be one, but you still want to be able to scale that business and start hiring people to help you out by doing that. Single family homes, it's hard to do that because they're all different. You have 15 homes scattered around the city. They don't all have the same type of hot water heater. The roofs are different. You have different AC units. You have different appliances. You have a 20-unit apartment complex. Each one of them is 2 beds, 1 bath, or 1 bed, 1 bath. They all have the same appliances, all the same hot water heater, same AC units. It's a lot easier to do that while you're transitioning from your full-time job into real estate.
Yeah, and even things like managing bills, like managing the taxes for it, it's one property versus 50.
Yes.
The transactional costs on 50 closings for the house versus one, things like that. Yeah, that's really good stuff.
The insurance bills, you got 50 insurance bills. You have multiple LLCs going on. It's a lot of work, multiple checking accounts if you do it properly, because you don't want to hold, let's say you have 5 or 6 houses, you don't want to hold them all in one LLC because you want to protect yourself depending on the value of them. So you just have to be careful. You have to weigh the pros and cons. And I know a lot of people listening are going, I can't get into multifamily. How do I do that? I don't have the money. I don't have the experience. There's so many ways to get into multifamily. You can start raising money from somebody else's deal, become a sub-syndicator. You can partner with somebody. You can start your own syndication. You can go out and you can get owner financing. There's so many different ways of doing it, but you can't do that unless you educate yourself and you say to yourself, how do I start? Because most people are just like, they just think it's just all about the money. And look at all the entrepreneurs out there who are successful. Look at Facebook, look at Bill Gates. They didn't start out with a ton of money. They had an idea and they raised capital. So you can do the same thing in multifamily, but you just have to know how to.
I think a wise man once said that profit is the fuel, not the destination.
I don't know what that guy's name was, man. He was really smart, that dude, right?
So smart. Well, Gino, I wanted to ask you about that life coaching aspect. And I think it's important because the people that I've met through this whole journey of towards financial freedom, they really focus on bettering themselves, and success becomes a byproduct. Like you said, the profit's not really the destination, it's the fuel. So what really sparked you looking into life coaching?
Well, I read a book back, I think in 2008 or 2009 from T. Harv Eker, Secrets of the Millionaire Mind. I read it the first time and I was like, I don't want to curse on the show, but I said, this guy's a dick. What kind of book is that? Then I read it a year later. I'm like, wow, that's me in that book. I mean, I was totally me being like, what does this guy know? I mean, like, your fruits are your roots, right? I mean, whatever you're putting out, you become responsible for your own life. Don't blame everybody else. And that's what we have. We have a culture of everyone else blaming, no one taking responsibility. The super successful people, the leaders out there are the ones taking responsibility. They're on a podcast at 6 o'clock since I've been working 8 o'clock in the morning. I love being on this thing. I could say to myself, I can't do it. It's been such a long day. No, leaders got to go out there and show. So my team sees that I'm doing a recording this evening. They will follow my lead. I think that's the most important thing. And that spurred my life coaching. So I'm like, he's right. It's all about personal responsibility. It's all about your financial thermostat. Where are you setting your financial thermostat at? Whether you love him or you hate him, Trump's financial thermostat set at billions for B. He can't go back down to millions. I mean, that's where people are. And you can change your financial thermostat. So when you go to life coaching, you're all working by yourself. We call them the energy blocks. Those big 4 blocks of energy, they're usually external. Then they're usually, internal. External blocks is like the economy, the weather. Internal, usually your thoughts. They start out with limiting beliefs. We all have limiting beliefs. My limiting beliefs was you have to take it slow. You can't grow too fast. We have to not overextend ourselves. We have to take not too much risk. We have to stay in our own market when we're investing in real estate. Money doesn't grow on trees. All those limiting beliefs, I know everyone out there has them. Pick up a pen, start writing down a couple of limiting beliefs that you have and challenge yourself, because I had those same limiting beliefs that I'm no different than anybody else. I just went to life coaching school. I was able to work on them and flesh them out. And once you crush a limiting belief, that belief is gone. You can blast right through that. The second one is the interpretation, what we're interpreting. I could have gone on this podcast 10 minutes late. You guys must have said, where's this Gino guy? What a jerk. Maybe I had a bad connection. You interpret it in one way. I could have interpreted it another way. So we have to worry about how we're interpreting things in life. It's really important because that'll actually set us off. And, we could go off on the wrong tangent if you don't interpret things properly. The next one is the assumption. You can assume things in life because they've happened to you, and we all do it. On my first real estate deal, I totally crapped out. My second one didn't do much better. So I could have assumed, hey, you know what? This real estate thing is risky and it's not for me. I could have made that assumption. I went the other way. I said, you know what? I've got to learn how to do real estate. It's not real estate that's risky. It's me that's risky, me that has to learn. And the fourth energy block is what we call the Gale, the G, the gremlin. That stands for that inner critic in your head telling you that you're too ugly, you're too fat, you're too stupid, you're never going to make it. We all have that inner critic. I use it to fuel myself because I would say to myself, my goal was to be a business person, but I was wearing a chef coat. I had pizza sauce on me. I'm like, who's going to talk to me? I mean, who wants to? So that was my gremlin holding me back. But then at the end, I had enough pain where I said, it's either moving away from pain or moving towards pleasure. So I was moving away from pain every day. And how did I do that? I would work my butt off. I do podcasts. I do a lot of recordings. I, educate myself to get and, just knock that gremlin out of my mind and just get him out of there because I wanted to work on that. So those 4 energy blocks are really crucial in life coaching. I think everybody needs to work on themselves and figure out where they are. And then there's that clarity aspect of what do you want? Why? The big why real estate? I mean, anyone can say real estate is great. I can shoot off 15 reasons why real estate is the best investment as opposed to stocks or cryptocurrency or whatever you want to talk about. It to me, it is. There's no other vehicle, maybe whole life. Whole life is a long-term strategy, but I love multifamily. But if there's not a big enough why for you, then you're not going to figure out how to do it. So for me, it was the same thing. I didn't know what my why was 10 years ago. Now, the last 5 to 6 years, I understand what my why is, and I can execute on how to do it.
Yeah, that's amazing. I'm rereading that book right now, by the way, the T. Harv Eker book, Secrets of a Millionaire Mind. It's great to come back and reread some of those
Mm-hmm.
mindset type books.
Mm-hmm. I read a book 10 years ago from Garrett Gunderson's Killing Sacred Cows. Same kind of effect on me. I read it about 10 years ago. It's really an abundance, scarcity mindset book. He's a great writer. I love the book a lot. It was written back in '08. I read it about a year and a half ago, and I said, I've got to get this guy on my podcast. Didn't resonate with me back in '08. Now I'm like, wow, what a great book. I wasn't ready to hear his message. So you just go back and reread those classics. It's important to do that.
Yeah, I think so too. That's amazing, and it is interesting how sometimes you're just not ready for it, and then when you reread it, it hits you like a ton of bricks, and you can't
Mm-hmm.
believe it. The life coach, I love that. What might you say to someone who has never considered a life coach and they don't know how to go about finding one that might be a good fit for them? There's so many people out there and so many different things.
Yes.
It's just hard for people to figure out where to start. Do you have
It,
any
it, it
advice?
is. It is because we're always wary about the sales guru and this. I
Right.
went to IPAC. I went for the Institute for Professional Excellence in Coaching. It's a school up in New York. They are not cheap. It wasn't that expensive, but it wasn't cheap. But I went to their training. It took me about a year to get their training. Go on there and see who's an IPAC certified coach. I mean, there's a lot of them out there. Just Google LinkedIn and you'll find them up. They're trained really well. I mean, there's so many different gurus out there who have training and life coaching programs. There's Tony Robbins. I'm sure tons of them. What I would do is just interview them and ask them questions and see how they will tailor to you and figure out what you're looking for. With a life coach, you basically want a life plan. You want to be able to be able to learn how to set goals. You want to be able to figure out what's holding you back. You want to figure out what your fears are. You want to figure out, that keeps using that word clarity. What clarity are you looking for in your life? And more importantly, the questions and the answers inside of you. A real good life coach is going to be able to pull them out by asking really good questions. So that's what I like about life coaching more than anything else. It's undervalued in our society now because everyone uses it as a tag word, but it's really powerful. I mean, 80%, 80% psychological and 20% mechanical. If you can figure out how to do cap rates and cash on cash returns and dealing with tenants, that's 20% of it. 80% of it's right here, knowing and figuring out how to do it.
Absolutely.
Couldn't agree
100%.
more.
Now, you mentioned that you partnered up with somebody to get into multifamily investing. And you mentioned that somebody could start doing that, which I absolutely agree. I don't think that success is ever achieved alone. And in fact, I'd argue it's more fun when you do it with others that you really enjoy being around. So how would you recommend somebody find somebody to partner with or syndicate for a deal?
That's a great question. I was lucky because I had my partner, Jake, who I knew from the restaurant. He was my brother's friend. He was a pharmaceutical rep. So he'd come in every month with his orders. He'd have his calendar worked out every day. I need an order the 15th. I need an order the 24th. I need an order the 3rd. And if you know pharmaceutical reps, they're going to call you the night before and they need food catered an hour and a half from the restaurant. So I'm like, this guy's on his game. He knows what he's doing. He's hungry. He's young. I was fortunate that he lived in New York with me and he moved down to Knoxville, Tennessee. So I'm like, dude, when you get down there, I'll teach you real estate. Let's start buying deals. And he's like, you know what? I got to get out of the rat race because I'm sick of this 6 years, 4 layoffs in 6 years. He just couldn't handle the layoffs anymore. So I was fortunate in that aspect. I think the most important thing about picking up and trying to find a partner is value-based decision-making. You have to be on the same ethics, same morals. And when you're talking to someone that you like, you have to like the person. Because if you don't like the person, you're going to be talking to them. I talk to Jake 3 or 4 times a day. I usually do 1 or 2 podcasts a week with him. I have our level 10 meetings every day. I do presentations with him. So I'm always talking to him. So if I don't like him, that's not going to flourish, that partnership. So you need to talk with somebody who has your ethics and, more importantly, your goals. Jake and I both wanted to create businesses. We were both goal oriented. So if your goal is to do 50 units, Kevin, and Adam wants to do 3,000 units, is that partnership going to be good? I don't think so. Kevin, if you want to fix and flip and Adam wants to, wholesale, or he wants to buy multifamily, that partnership's not going to be great because there's going to be a lot of conflict there. So you really got to get on the same page. You have to have the same work ethic. Jake is up at 6 a.m, grinding it out. And I work just as hard as he does because I know that whatever I'm doing, I'm putting into the company, whatever he's doing. So it's not, what did you do? What did I do? That never, ever came up with us in the last 10 years we've been together. So that's really important also. So value-based decision-making, having ethics, the credibility that you can rely on your partner and working hard, I think is really important to picking out a partner. And obviously going to these live events, meeting people at live events, meeting people in these communities that are around, that's important also.
Yeah, that's a great segue into the next thing I wanted to ask you about, Gino, is you guys have a big live event coming up in Orlando. I'm going to be there, by the way. I'll come find you and
Oh,
say,
awesome, dude! You can't miss me. I've got 6 kids. The kids will be all at the booth back there, so you won't miss me.
awesome, man. Totally looking forward to it. So you're having a big live event in Orlando. Can you tell us a little bit about it? And just talk to us about why events like this are so important. I didn't realize just how valuable these can be until I went to one and just got so much value out of the relationships I met and the people I met and the knowledge. So if you could talk a little bit about that, I think
so that's great. If you think about it, take it from a life coaching perspective. Most people, when they hear about an event, what do they think of? Pitch fest. They're going to sell me.
Yeah.
They're going to sell me a product. And you know what? They probably should sell you a product because we've got something to sell. So it's all how you interpret it. It's all about your assumptions. If you go there with an open mind, and fortunately for us, we're not really selling at this event because it's not. It's a once a year event. It's more a flagship event. So we do some selling there as far as our coaching products. If you want to continue the journey with us, we show our students successes. But more importantly, we've got Eric Thomas speaking there. We've got a guy named Rick Sapio speaking there. We've got Cole Hatter who's speaking there. We have all of our vendors there. Jake and I are going to do a presentation. We have our property management team there. We're going to be teaching buy right, manage right, and finance right. So it's really 2 days chock full of a ton of information there. And like you said, the most important thing to me, you have people who are syndicating deals and people who are trying to raise money, and you're meeting both of them. You're meeting and matching, and you can make that one relationship over the weekend. It's worth everything. So, who you surround yourself with, the environment you put yourself in is going to deem your success. When I was at the restaurant, I was dealing with people who were making middle, low income wage jobs. That's who I was dealing with. When I started partnering with Jake and working in the multifamily, I got it surrounded by people who were a lot smarter than me, who were wealthier than me, who were a lot more successful than me. That's who goes to these events. People who know that there's a lot of value in it. And by the way, if you don't want to be sold, you don't have to buy. I just remember people always pushing back and going, oh, they're always selling there. They should be selling. It's a business. But at the same time, there's so much value at these events. Just the energy that the event creates and just the knowledge and the experience and the people that are at the events, that changed my life. That's my one regret from being in the restaurant, that I never went to these events. Once I got into coaching school and I started going to the weekend coaching events and that kind of stuff, changed my life for the good, forever.
Oh, that's awesome.
That is awesome. And I wish I could make it. Unfortunately, I won't be able to make it. I got a work thing, that 9 to 5, man, that rat race.
That's okay. But that is fine, because I had the same thing. I never forever. That for me was partly the restaurant, but it's partly myself not getting out of my comfort zone. Someone told me there's 3 types of people: introvert, extrovert, and ambivert. Ambivert's in between, right? Ambivert, I'm the kind of person who's an ambivert who goes out there and has to do it. I don't really like to do it, but I was always the introvert in the beginning, saying, I'm not going to go out there. I don't want to meet people. Trust me, get uncomfortable, because everyone else there is going to be uncomfortable also. So you go out there, you'll never know who you meet. It's a lot of fun. Trust me, they're a lot of fun.
That is a fantastic point, that everybody else is uncomfortable also. So the playing field is pretty level.
Yes.
And with that in mind, what other tips would you have for somebody that's maybe, let's say it's their first time attending, or they're on the fence about attending? What would you say to them in terms of, hey, this is an event, this is what you should do to make the most of it?
It's funny, Kevin, because someone had told me about a year ago, I got into the coaching, we're doing the real estate, and he says, don't think everyone has it figured out. He says, we are all winging it. Everyone out there is winging it, and they're figuring it out. And the ones who are truly successful, they commit, then they figure it out. That's how it happens in life. If you're there analyzing, overanalyzing, that broker is going to move on and send that deal to somebody else. You just have to commit and then figure it out. You just go away for the weekend. You enjoy yourself. I mean, for being on the fence, it's good. It's a family event. So we have somebody speaking about family there also. So, I mean, it's really encompasses everything we do. We're going to have our property management team. So if you're out there learning how to manage a property, you can talk to Jennifer. She's going to be there. You can talk to Shannon. Listening to Rick Sapio. Rick Sapio is in private equity. He buys businesses. He's been mentored by Warren Buffett. I mean, it's an amazing event to meet some really cool people there. And obviously, if you're into multifamily, it's all multifamily. So there's a lot of things for everybody, whether you want to raise money, whether you want to bring a deal, whether you want to learn how to buy right, underwrite. I think it's all there for the viewer, for the listener.
So, Gino, I want to switch gears just a little bit and ask you about people who invest passively in your deals.
Mm-hmm.
I know you said you syndicate now, and you have people who will come in and passively invest as a limited partner. What types of people typically invest in your multifamily deals?
It's really funny. We did our first syndication last year in November, and we've closed on 3 deals since November. One in
Wow.
November,
Wow.
one in April. We should be doing more, but there's not much out there. And when you first
Yeah.
start out, it's syndications like anything else. It moves really quickly, and you just start out at the size you feel comfortable with. We could have bought the deal ourselves, but I said to Jake, let's rip off the Band-Aid and let's buy this deal. So, I mean, the typical investor that invests in our deals, we're doing 506Bs, so we have sophisticated and accredited, so it's friends and family. We really like that model for us, especially now because we want our students to learn and earn at the same time. So minimums are usually around $50,000. 8% preferred rate of return. That's what we're giving on our deals. We want the momentum deals. We don't want those heavy lifts in this type of the cycle. So for us, we want cash flow day one. What is Jake's thing? He says, if it don't cash flow, let the grass grow. So that's our motto. We want cash flow day one, and obviously with that value add component. That's why we're looking at a lot of deals to find that. You want some rent bumps, you want some income incrementals, you want to be able to scale back on the expenses. And the great thing about it now is the debt component has been so awesome. Our last deal we closed a month ago, we got 3.5% interest rate on a
Wow.
30-year 30-year 10-year fixed rate, and it's 5 years of interest only. So we really crushed it with the debt component of it.
Man.
So if you pay a little more, we had a 7% cash on cash. But then what happened was, I don't know if you remember, about 6 weeks ago, the treasury just dropped, and we got another 47 basis points. So it made our cash on cash go to 9% actual, which is pretty phenomenal in this market. So, we're looking for investors who friends, family, students. We have all types, but we're looking for people who want to keep their money in the deal for 5 to 7 years. That's what we're underwriting for. So if something happens in the economy, we take a little recession, you've got a couple of years to really recoup. But I mean, they're 8%. They're great deals. They're deals that we invest into. We have a lot of our own skin in the game too, which is, I think, one of the most important things that sponsors can do. If they can put their own money in the deal, show their investors that they've got their own money in the deal. It's really important.
Yeah.
I love it. Now, speaking of the investors who invest in you, why don't you think that more investors are willing to invest passively? Because you could definitely, like you said, if you wanted to get involved in a multifamily deal, you could invest passively. What do you think is holding people back, and how would you say, hey, let me help you get past that, I guess, that hurdle?
Do you mean why don't more people invest passively?
Yes, in multifamily specifically.
That's a good question. I think it's limiting beliefs. I don't think people even know about. Syndication has been around for it's been around forever. But I mean, in the last 7 or 8 years with the Jobs Act, 7 years ago, that really I think started accelerating things. And I think people want control, but they don't want to do all the work. You can't have it both ways, right? And I think if you can find a great sponsor, I think we're good sponsors. I think we're transparent. We do monthly webinars for all of our deals. We did 2 last night for our deals. So we show our investors what we're doing. We give them quarterly reports. We do quarterly draws. We're upfront with them. We tell them everything. We have money in the deal. If you can find a sponsor who's like that, who's got a proven business model, I would tell anybody, you know what, if you've got some money sitting on the side in an IRA, put in a self-directed IRA or, fund it and just try it. And it's really, truly, that is truly passive. So if you can get 8% with an IRR, hopefully in the 14 to 15 to 20% range in 5 years, that's fantastic. You haven't done anything. You've just put your money aside. Now, obviously, the general partner, the guys who are running the deal, they're going to make more money because they're the ones who are putting all the sweat equity into it. They're signing the docs for the debt. So they're taking the massive amount of risk. They've got the whole skill set. But if you're doing nothing and you're getting an 8% check every quarter, 8% a year and a check quarterly, that's fantastic.
Agreed.
Yeah.
100%.
So, Gino, we talked to a lot of our guests about how they are preparing for the upcoming correction. And I'd like to hear your thoughts on that, some things you guys are doing and what you think, what you guys personally expect.
You know the scene in the Godfather with Fredo when he says a Hail Mary every time he throws a fishing pole in. I say a couple of Hail Marys. I mean, no, I'm just joking. I know that's a good question. I try not to read the news too much because every day it's doom and gloom. Every single day there's something going on, whether there's not enough liquidity in the market or Iran's bombing this person. It's just amazing, and I think it's just trying to dumb people down and trying to get people's focus off what they're supposed to be doing in their lives, which is working on themselves and working on the model. I think what people need to be doing now is really need to be selective on buying a deal. There's still deals out there. You just have to really work really hard. You have to cultivate the relationships. And I think this is actually a pretty good time to get into real estate, multifamily. If you haven't, you want to start cultivating those relationships. It's a long game. You're not going to get into multifamily and 3 months later you buy a deal. I just told my, our community director, it takes people 4 years to get a college degree. If you get into multifamily and it takes you 18 months like Jake and I did to get your first deal, it's a home run. So if you're looking at an 18-month window, you're probably going to get a correction within the next 12 to 18 months. The market's going to come down a little bit. You're going to be getting in. You're going to be lining up your investors. You're going to be lining up your brokers. You're going to be lining up your relationships. It's going to take you a little while to get there. So start now and start building those relationships now. Be really selective on the deals. Make sure you learn how to underwrite really well. Focus on a market with job growth. That's why we love the Southeast. You're up in the Northeast. You're up in California. No offense, but can California get any stupider? I mean, can they continue stop passing these rent control laws? I mean, it's just between them and New York. I don't know they're competing for the stupider prize because I understand they're beautiful places to live. I lived in New York, but there comes a point where people can't afford it. And when a recession hits, it's all about affordability, and not even for the employees. It's for the affordability. When Carl Icahn moves his hedge fund from New York to Miami, and he just did this last week. They announced it last week. You have to say to yourself, it's not just about the money. These guys don't like it up there anymore. They don't like the regulations up there. They don't like what's going on up there, and they're moving. So pick a market where you think there's going to be job growth, because when the recession hits, jobs will slow down. You want the affordability factor where people can afford to live there. You want population growth. You want an area that has, a pretty healthy business respect, where the local government respects business and they want businesses to come, not push businesses away. So I think all those factors you need to focus on. So focus on that market, focus on your education, focus on the underwriting, and get together and get your networking down and get your relationships built up.
That's great.
I love it. I think that's all great tips. And just to piggyback on that, when you talk about get your markets down, what do you look for in a market?
Well, we are currently in Tennessee. We're bought our first two syndications in Louisville, and we just bought our third deal. We closed in April in Lexington. So we love that we're vertically integrated. So what that means is we basically manage our properties, we buy our properties, we even finance the debt on our properties. We do everything in house. So we want to be within 3 to 4 hours of Knoxville. So we draw a map. So that hits us a lot of areas. We can go to Chattanooga, we can go to Nashville, parts of North Carolina. We're underwriting deals in South Carolina. We are in Kentucky. We're going into parts of Alabama. And my brother is now moving into Jacksonville. So we'll be in the Jacksonville market. So you see all those markets are all growth markets. They all have, low taxes. They all have great, Tennessee's a right to work state. So they have jobs there. So that's what we're looking for in the market. We're looking for, places where we can find people that are going to want to rent. So, and there's a lot of inventory in these markets also. So that's an important thing. Up in the Northeast, whether let's say you're in New Hampshire, Vermont, not much multifamily up there. There's 10 units, 12 units. So take that into consideration. Down where we are, there's much more inventory where we are also.
Yeah. All right. That's good stuff. So, Gino, you guys have been growing and expanding like crazy. You're very successful by most people's standards. What is next for you guys?
Well, we just started process called scaling up, the Petra coaching, because we don't know how to scale a business. We've never done it before. So we practice what we preach. I mean, we're coaches, we're real estate coaches, but how do you scale a business if you've never done it before? I mean, you obviously scale a property management company, but with that comes the bumps, and, managing 100 units is a lot different than managing 1,000 units. So it's all about the culture. So we've created a culture, we've created mission statements, we've created all the stuff that you need, quarterly rocks, we've created big, hairy, audacious goals, all that stuff where I didn't know that 2 years ago. And that's the stuff that you need to keep you growing and to keep you motivated. So we're fortunate that we have something that we call the Rand Power Wheel, where it's basically multifaceted multifamily, where you start out with one investment, you grow to 2 and 3 investments, and then all of a sudden you start adding pillars on, whether it's a management company, whether it's an investment company, whether it's an education company, whether it's a syndication company, whether it's a capital company, you're doing mortgages. And that's what we've done over the last 3 years. And they just work so beautifully well when the podcast is getting you leads for your syndication company, and the education is teaching your students, and your students are investing in your deals, and the property management company is running these properties. It just works so well. And to get them to work all together, it's a little challenging because you have different places. We're all in Knoxville, but I'm here in St. Augustine. And as we grow, we're hiring and being able to bring the right culture fits on, because I think culture is so important. Jake used to say he poo-pooed that 3 or 4 years ago, but that was my mistake in the restaurant. I didn't hire the right culture fit, and I kept people on too long. I didn't fire them when I should have, because I said, you know what, it's going to be pain. Short-term pain always beats long-term pain. So just think of cutting out the cancer, getting rid of that short-term pain, and focusing on that long-term gain.
Awesome. That is a good nugget too. There's so many nuggets in this. I love it. Well, Gino, we typically like to ask our guests a question about their favorite piece of technology, but being that you have so much experience in the restaurant space, I got to twist the question a bit. And what would you say is your favorite piece of restaurant technology?
That's funny. The restaurant technology. Good question. I was a mom and pop, so we didn't use technology in the restaurant. So I would tell everybody without a doubt, we even have cash register. You need a POS system. I mean, you need to track data. So for us in the real estate, you need property management software. It's important. We use Appfolio. We love Buildium also, but you need property management software. You need something like that. And the same thing with the restaurant. You need to know what your numbers are. That's crucial. And then as far as you start scaling up, we're in the B and C space. So we're not in that beautiful A space where you have Nest and you have, wireless keyless entry. All that stuff is great. You have Amazon lockers. That's coming. That's coming to the A space. I don't know if it's coming to the C space yet, but that's not coming. That's not there yet. So just look and see what's going on in your space and what your competition is doing. So then you know that, hey, they're offering wireless entry and keyless entry with iPhones. I need to do that. So it's really important that you look and see what your competition is doing.
All right. What was your favorite video game growing up?
I didn't have video games. I played outside. I'm an old timer. I'm a lot older than you guys. So Nintendo came out when I was growing up. So I sucked at video games. I mean, my brother kicked my ass. So I'm like, dude, I ain't playing no more. What I mean? It's one of those where I lose all the time. So I ain't playing.
That's great. Oh man. So Gino, this has been awesome. We've really enjoyed having you on. I think you have just dropped so many golden nuggets that, we're going to be able to listen to this one over and over again and just love it. Where can people find out more about you?
Sure. Real simple. Just go to jakeandgino.com. The website's got all of our podcasts on there. We have 4 weekly shows. I actually do a show with my wife called the Multifamily Zone. It's for spouses. Cool. We have a syndication podcast. We have a Wheelbarrow Profits podcast, and we have a Movers and Shakers podcast, which highlights our students who are closing deals. So we love the podcast space. It's a great way to get people motivated, inspired. It's a great way to create and build the brand. So just go to jakeandgino.com, and on iTunes, it's a Jake and Gino channel or Wheelbarrow Profits. If you need to ask me any questions, you want to get in touch with me, just email me at gino@jakeandgino.com.
Awesome. And we'll put all that in the show notes and link up to everything there. So thanks again for coming on. This has been great, Gino.
Adam, thank you. Nice meeting you guys. I will see you in a month. And Kevin, we'll send some pictures to you, bro. Don't worry.
Looking forward to it. Thank you so much.
Take care, guys. Thank you.
Thanks.